please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, this is an all-round strong performance coming in from TCS, particularly because the drags which were in the form of BFSI as well as retail in the last 2 years now seem to be behind the company with the strong performance that they've clocked it. So the two key numbers in terms of the verticals, one is BFSI, which has seen a growth of 3.7% on a quarter-on-quarter basis, and retail too has seen a growth of, again, 3.7% on no, I don't have the retail number, but North America is at 3.7%. But BFSI has accelerated quite smartly. The company had indicated in their conference call last time around is that in BFSI, all the other geographies except US were anyway firing. Particularly for US, they said based on their conversations, the near-term visibility is better than what they had a year ago, but they will wait for Q1 to give some sort of a commitment to that, and that seems to be playing out. They had indicated that BFSI has bottomed out, and given the 3.7% quarter-on-quarter growth in the BFSI vertical, it puts them on a strong start. And with a 4.1% constant currency growth in Q1, there is quite, there is a possibility that the company could see even a double-digit year-on-year growth in FY19, a 10% growth in constant currency terms. Let's get in some reactions. Karan Tarani of Daulat Capital and Apurva Prasad of HDFC Securities are here with us. Apurva, based on these numbers, do you see constant currency, the company hitting a double-digit growth in constant currency terms in FY19?
Yeah, so we were working with about 8.5% constant currency. I think there is an upside risk to that estimate. So when purely in the result, it looks like a 1% beat on revenue. Margins, we were expecting about 25% or so. So we're not really too surprised with the margin performance. But I think the revenue performance, we were at about 3% constant currency. 4.1 looks a very solid number, especially the fact that BFSI is coming back pretty strong and digital growing pretty fast. I think I got that correct. If I got that correct, about 45% growth YY in digital, that continues to be in an accelerating trend. So I think these three are sort of key pointers to really look at. I think there is an upside risk to revenue estimates.
Karan, I want to get your perspective on the BFSI recovery that they've seen. It's 3.7%. We need to, of course, get a breakup on how the recovery has happened. But the commentary seems to suggest that BFSI is rebounding back, and specifically North America. The pressure was because BFSI clients in North America weren't seeing a recovery, and North America is up by 3.7%. In fact, to add to the point that Rima was making, North America growth is the highest in 12 quarters. So, Karan, would the street take heart from this fact? Would this be the turning point for the company, given that all verticals were performing but BFSI?
Yes, definitely. It's been a very strong quarter, broad-based, very good performance. Hello, can you hear me?
Yeah, Karan, go ahead.
It's been a very strong quarter, basically broad-based growth across key verticals and across key geographies. US, as they indicated, the retail and the BFSI vertical have bounced back. I think, within the BFSI vertical is the insurance space, which could have done slightly better, because I think last quarter insurance was in a bad state, so that would have improved things over there. And overall, on growth perspective, basically digital is the key over here. So they've got this sustained momentum. I think the third consecutive quarter where they're reporting growth of close to 35-40% in digital services. And if this kind of growth level really sustains, you're going to see digital as a contribution to go up to 30-35% in the next 12 to 18 months. And more than anything, that will be a major trigger for TCS and other IT companies.
All right, I just want to throw some numbers at our viewers. On a constant currency basis, the company's year-on-year numbers are improving. In Q3, their constant currency growth numbers on a year-on-year basis, it was 6.2%. In Q4, it improved to 7.2%. And now in Q1 of FY19, the company has delivered a 9.3% constant currency growth on a year-on-year basis. Even for digital, as Karan was pointing out, it is an improving growth trajectory or a trend. So, for instance, this quarter, the company has delivered nearly a 45% growth, 44.8% in digital on year-on-year basis. In the prior quarter, it was 42.8. In Q3 F518, it was 39.6. In Q2 F518, it was 31%. So, basically, the growth numbers on an enlarged base for digital continue to keep improving. So, that is clearly firing. And now it doesn't seem like the company has any headwinds or drags. Moshe Khatri of Wedbush Securities joins in now. Moshe, this looks like an all-round strong performance for TCS. So they're kicking off the earnings season in style, but the stock has already rallied nearly 40% since the start of the year. It's trading at 25 times F519 PE. Are these numbers in the price, or do you expect upside in the stock now?
Well, at this point, we're starting to look at FY 2020 numbers. That's number one. Number two, if we are going to see this improvement sustainable, obviously we're talking about accelerating top-line growth. So all these things will probably help the stock keep on working down the road. But we've definitely seen, some of those important kind of critical areas that are looking better. BFSI is looking better. I don't have the retail number yet, but I bet you the retail number will look better as well. North America, these are all critical kind of metrics that we look at. It will be interesting to see what management has to say about digital. I think digital is about 25% of revenues for the quarter. I'm assuming growth there is going to be robust as well. So, yeah, I think across the board, it was a good quarter, I would say, finally.
Moshe, in the second half of FY18, we saw TCS cracking quite a few large deals in terms of value. Do you think that has led to the kind of turnaround that we have seen, and is that sustainable in the near to short term? And my second question to you is about the margins. They have been guiding, or there's an aspirational target rather, of 26 to 28% on the margin front. By when do you expect them to be able to reach that?
Yeah, good point, Rima. So a couple of things. We have seen an uptick in large deal flow for some of the, at least at a couple players in the industry. Accenture had a pretty nice uptick in outsourcing deals. This is something that was reported a week, 2 weeks ago. ISG has been pointing out that the deal flow is improving. So it almost feels as if the spending on legacy work seems to be kind of improving somewhat. I think that's definitely helpful, and it seems that at this point it may be sustainable. So that actually means that the cannibalization that the industry is seeing may be winding down a bit. In terms of where margins are, I think a lot of it is going to be a function of wage inflation, wage hikes, visa costs, and we have been hearing that some of the relatively new digital deals are having an increasingly larger offshore component. So that also is going to help the cost structure for the industry down the road. And as you said, help TCS reach their margin aspirations.
Okay, I've got some more internals. Retail has done very well, as we had guessed. So retail has seen a 3.6% growth on a quarter-on-quarter basis. On a year-on-year basis, it's a growth of 12.7%. Some other verticals like energy continue to fire for the company. So energy, for the second quarter in a row, has seen a 30% plus growth on a year-on-year basis. Even in terms of geography, we had the North America figure of 3.7%, but UK and continental Europe continues to drive growth for the company, seeing a growth of 8.2 and 5.3% respectively. And Latin America, which had seen a degrowth in the prior quarter, has bounced back. Growth is lower than the company average at 2.6%, but it's growth nonetheless. It's India and the Middle East region which have recorded negative growth for TCS in the quarter gone by. Also, in terms of the client metrics, the $100 million client bracket has seen an addition of 2 clients. So now there are 40 clients in their $100 million bracket versus 38 in the prior year. So a couple of the other internals are also looking quite strong for the company. Apurva, would you look to increase your EPS estimates post these numbers or any change in your target price?
Yeah, I think we'll wait for the management commentary to really take a call on the EPS estimates. But as I said earlier, that there is an upside risk to estimates based on what we're seeing right now.
So what is the key thing that you will want to hear from the management in the press conference?
I think how sustainable is this growth, especially the BFSI, retail, CPG, some of these verticals, which are the core verticals for the company, and they were laggards. I mean, let's not forget that, I mean, they've still grown sub the company average growth. But I mean, the fact that if this is sustainable, that's one thing we want to understand. The overall growth outlook, which the company, I believe, had delinked it from the NASSCOM growth average. We want to sort of understand how they're seeing the entire year pan out, whether there is going to be a seasonality factor at play here, considering the fact that first half tends to be heavy. So is there any lumpiness in this? So I think these are some of the important things we're looking at. The other important factors are also on the margins. They've obviously remained below the targeted EBIT band. So what sort of levers are really there to pull up margins towards those targeted EBIT bands? So I think these are some of the important factors to really look at. But yes, I mean, at least the early signs are quite positive.
Okay, for TCS now, the digital revenues on an quarterly annualized have now hit $5 billion. Digital contributes 25% of the company's overall revenues, which would give it a quarterly run rate of $1.25 billion in the current quarter. So if I annualize that, it's already hit about $5 billion versus, say, Infosys, which is closer to $2.8 billion as of the last quarter. So digital continues to be a very strong growth driver for the company this time around. Karan, any more thoughts on the numbers? You've looked at the internals?
I think just some takeaways on the digital would be interesting to know from the management, because digital contracts are usually short-term in nature. So is this growth really sustainable from here on going ahead for the next 1 year or not? That needs to be a question mark. And obviously second would be on the margin front, because they've been continuously guiding for this aspiration level margin of 26 to 28%. It's been almost 1.5 to 2 years now. They don't achieve that, even the lower end of that guided margin range. So I think margin will also be a question to answer from here on going ahead.
Okay, a quick question to Moshe before the press conference starts. Moshe, 25% of revenues are now from digital. If you compare the other Indian IT companies, would you say that TCS is in a better position to be able to grab those large digital IT deals that you were talking about? And the second point on how large would digital have to be in terms of percentage of revenues for it to start scaling up margins as well?
I would say that in our group, the group of companies that we follow, both TCS and Cognizant are very well positioned to continue to expand their digital presence. That's number one. Obviously, the best proxy here is Accenture, and for them, digital is about 55–60% of revenues, and this is where you are getting that scale that you're talking about.
Moshe, on BFSI in particular, any reason to believe that this performance may not be sustainable by TCS? Do you see any chinks in the numbers this time around? Any red flags?
All we can do is make certain assumptions based on the press release that some of the recovery in digital, some of the recovery in BFSI had to do with some of the large banks that are U.S.-based. If this is the case, it seems that this is the beginning of that recovery. And then, obviously, the other thing that we have to worry about is the macro and the geopolitical events that could probably derail a lot of things down the road.
What is your own estimate of TCS's constant currency growth in FY19 and FY20 based on Q1?
We don't cover TCS actively, but we're assuming, as I said, if this is sustainable, I'm assuming that the industry can go back to double-digit growth, which is something we haven't seen for some time.
Yes, we haven't seen a double-digit growth by TCS for quite a while now. I think at least in the last 3 or 4 years, the company has not managed to hit a double-digit growth. I think the last time around was in FY15 when the company had a dollar revenue growth of close to about 15%. Then in the last 3 years, the company had about a growth of about 6 to 9% in terms of the dollar revenue growth. But this time, based on the performance, the strong start to Q1, a recovery in BFSI as well as retail, the continued strength in digital, there is hope perhaps the company might see double-digit growth. And there you can see that's the management CEO and MD Rajesh Gopinathan.